Well, we do see stocks moving a little bit lower today. The Dow's down by 66 points, so off that record high that we've been talking about so much. But this doom and gloomer, who's one of our favorite, if we have a favorite doom and gloomer, is with us now. And Dr. Marc Faber, I'm sure, is predicting a crash. It always seems, not to give you a hard time about this, but it always seems like you're predicting a crash, and then we don't always get one. But are you still negative? What's going on?
Actually, I don't think I predicted a crash in gold.
Okay, that's true.
And the gold shares, as you know, this year are up 100%. I don't think I predicted a crash in treasuries. And treasuries, year over year, the long-term bonds are up 20%.
You know, that's a really good point. We focus way too much on stocks. We focus way too much on just stocks when there are so many other investment classes. You're 100% right about that. When's the last time, though, you were bullish on equities?
Well, I've been bullish on some equities like emerging economies. Stocks, they looked to me very inexpensive relative to the U.S. and still are inexpensive relative to the U.S. Around the turn of the year. And this year, Indonesia and Thailand are up 25%, as well as the Philippines, Vietnam 14%, Brazil 65% in U.S. dollar terms.
And those rallies can continue in emerging markets?
I beg your pardon?
Those rallies that you're speaking of can continue? You're still bullish on those areas?
I think all asset markets are expensive.
Okay.
You see, in 2000 we had a Nasdaq bubble. In 2007 we had a housing bubble and the stock market bubble. But not all stocks were very expensive. But now we have high real estate prices. We have high stock prices in the U.S., not necessarily elsewhere in the world. And we have, by historical standards, the most expensive bond market in the world in 5,000 years of history, with negative interest rates on more than $12 trillion worth of bonds. So if you tell me something is not sick, something is not very unusual, I don't understand the world anymore.
So what do you do then if you don't understand it, you know, if you're in a position where something just doesn't look right to you?
Well, look, we're all on the Titanic. As I said before, I think we need to diversify. We need a life-saving boat, which is precious metals, gold, silver, platinum, physical, stored in a safe place, not necessarily in ETFs. And we need some equities, well diversified, also by custodian and by geographical areas. We need some fixed interest securities, and we need some real estate, again, geographically diversified.
We always enjoy talking to you, Dr. Faber. Thank you for coming on, even if the message isn't so easy to kind of digest sometimes. And do you ever worry, by the way, as a final question, that go back to my first point, that if you come on all the time, it seems like, and it's such a negative message, that if it doesn't come true for a while, and even if there's a very good reason for that, and who knows, and that it somehow, the message gets lost and people don't listen as much? Or?
Actually, I want to tell you something. The interest by individuals in stocks has collapsed. There's very little retail activity. Now, you ask yourself why. Because normal investors, individuals, haven't made any money in the stock market in the U.S. since year 2000. First, they lost a ton of money in tech stocks after the bubble burst. Then they lost a ton of money in financial stocks after 2007, and in housing-related stocks, and in Fannie Mae, and Ginnie Mae, and then. And they missed much of the recovery, or were in the wrong stocks, or came in late. And over the last 12 months, many more stocks are down than they are up. The other day, the number of new highs reached about 200. That's all.
That gets to my point last hour. I was saying when nobody coming up the street says, hey, how about the Dow? Because there isn't as much interest. You're right about that. All right. Thank you again, Dr. Faber. Always appreciated.